Warm greetings to you, accountants. I'm preparing this video to assist you in terms of areas where you are struggling. So what I want you to do is to see this question. So what I want you to do for the meantime, can you get your pen and your paper so that we can start? Okay. This is a question that I extracted from your textbook. So I want to show you how we prepare the income statement for today. Then tomorrow I will also help you on how to prepare a statement of financial position. All right, so this is Luck owns a wholesale furniture store. His financial year ends on 30 June. Okay. So this is the year end. That's when they prepare their books. He provided the following trial balance. So we're saying this is what we call a what? A trial balance. Let me try to look for a pen here. All right. Right, just a moment. Okay. I think can take it from here. So what the objective of this is for you to prepare the income statement. So this is a question for income statement preparation. So this is what we call the trial balance. So I'll just write it. This is our TB. Okay. From our TB, we are going to extract income statement. So first thing, when you're given such a trial balance, you need to go through each item. Okay. On each item, we need to identify all items that are recorded in the what? In the income statement, and items that are recorded in the what? Statement of financial position. So the first thing that I want you to do when you're given such a question is to identify elements that are recorded in the income statement, and those are recorded in the statement of financial position. So let's start. Revenue, obvious, this one is income statement, we write IS. Then we've got purchases. These are goods bought for resale. They are recorded in the what? Let me just say those who are recorded on the first part, we call it a trading account. Okay. Let's write it trading account TA. Okay, trading what? Account. So trading account mainly is the top section of the income statement before we calculate our what? Our net profit. So just before gross profit, that's our what? That's our what? Our trading account. Okay, we'll show you very soon. So let's move on to the other one. Cost of sales, we can also write, this is a trading account, the top section. So we can just write trading account stroke income statement is still fine. And then our inventory, right? You can check on the date. The date here is saying 30 June 2001. That's where they prepare the what? Their books of accounts. I think you can actually see the date. And this is inventory for 2020/0. So it means this is our what? Opening inventory, and this is in our trading what? Trading account / the IS, which is the income what? Statement. Then when we are done with this one, we are moving on. Premises, this is SFP item as an asset. SFP item is what? Is a non-current what? Current asset. So the first thing that you need to do when you're given a trial balance like this one, right? Then this one also, we can also call it fixtures and fittings. These are more of at our school, these are your lockers. Okay, they qualify as fixtures and fittings. So this one is a SFP /IS. Okay, then trade payables. Trade payables is simple. Our trade payables also, there are SFP items. These are our creditors. SFP / our SFP items under what? We classify them under current liabilities, CL. Okay. Then we move on to another one. This is a receivable. Most of the students, they make a mistake. Trade receivables is not income. This is an SFP item, SFP SFP item, and then it's recorded under what? Under current assets. So we record it under what? Under current assets. Okay. And let's remember this is the second item. Okay, under current asset and is a what? Is a second what? Second item. Is that fine? We start with our inventory. So that is what you need to remember. Then our bank, as usual. Be careful. The bank, if you find that the bank is on the credit side, you can actually see that this bank is on the debit side. So this is the debit column, right? This is our debit column of the trial balance. This is our debit column, and the other one is our credit column. So when you see the bank on the debit side, it means this one is a current asset. Okay, so it's an SFP item, SFP item under what? Under current what? Under current assets. Okay, if it's on the debit side. But if you find it on the credit side, it's written bank and it's on the credit side, it means this item is a what? Is an item for SFP, but under current liability. It means it's a bank overdraft. But for now, don't worry. If you see it on the debit side in bank, it means it's cash at bank, and that's very simple, right? Rent receivable, right? You can see actually that it's on the credit side, right? Rent receivable, we record it under what? Income statement, right? But under what? The bigger issue as a subtopic is under other income. Let me just write this one, other incomes. Okay, so that's the first thing that you need to do. It takes time, but also other incomes, right? There is also time for doing that, so don't complain that it's wasting time. Then also you can actually see that this is discount received. So discount received, it's also an SF and not an IS item, income statement item, under what? Other incomes. Is that fine? Please remember that. All right, other income. So this video, I think it will help you other incomes. So other incomes, we're saying for in case of our let's say this is a school environment. The main income is coming from school fees, right? Other incomes, we can classify them under the uniform that you buy at school, the tag monies from tag shop. We are saying it's income, but it's other what? Income. So please remember the main income is the what? Is the revenue, that is the IS income. So this is the main revenue, but this is other revenues that we receive. So remember, rent received means we are letting out a certain building and we are receiving rentals as at the end of the what? At the end of the month. So we call it other income. So it's called the rent receivable. It means we are likely to receive that rent at the end of the accounting period, 30 June 2021. Is that fine? Right, let's move on to discount received. Whenever you buy goods in bulk from our suppliers, they usually give us a discount, or mainly, let's say, when we pay. Specifically, this one is when we pay promptly, all right, prompt payments. Okay, let's say we are supposed to pay by end of June, then we pay maybe, let's say, in March. Then we have a discount received, is other income. All right, this one is very simple. Insurance. Insurance is obviously this an item in the income statement under what? Under expenses. So expenses, I'll just write X like this. Okay, it's expenses, right? Expense, all right. We just write like this. What about rates? Rates is very simple. It's an expense. All right. Rates. Let's say you're using a machine. Let's say a food and nutrition. Let me use the fashion. Okay, you have bought, or you have been given a sewing machine to use for that period. Okay, you pay rates, not a rent. Okay, so rates is more of an expense. Again, it's an IS income, and we record it under what? Expense. That's fine. Right, then wages, obviously this one everyone knows. This one is also in IS income and IS, and it's recorded under what? Our expenses. Is that fine? All right, and then we have got office expense. This one is clear, it's specifying, so it's an IS item again, under what? Under expenses. Okay, then capital is obvious. Remember, this one is a SFP item. Okay, capital is a liability, right? SFP item under what? Equity and liability. Okay, equity and what? Liability heading. Okay, so I'll write like this, under equity and liability. So this is our what? our capital. Then drawings, I think you know, this is where we subtract. Okay, we subtract to say less drawings. So it's under what? SFP. This is an SFP item. SFP item. Again, we record it under what? Under equity. Okay. Let's say equity and what? And liability. Let me just write equity and liability like this one. So we record it. It's an SFP item under that. Okay. Then we've got a loan. Okay. We have a loan. This one, a loan from. So it means the business borrowed. Okay. So, but let me try to see how they describe this one. Okay. You should note how they describe this one. It can also be vital in terms of understanding what you're doing there, right? You can actually see that it's written 3%, okay? 3% here, and 10 years, all right? And another key term is from. So it means this loan, and another key term again, maybe it's the side is appearing on the credit side. So 3%, it means this loan we got a loan of $10,000 as a business, right? Let's say accountant of the company, and they are paying 3% loan, 3% interest every month. It means this component is an expense. Okay, so this component is an expense at the 3%. Maybe let me just write here loan. So loan has two components. Loan, we've got loan, an SFP item. Loan is an SFP item, SFP item, right? Under non-current liability, right? Then we've got also loan interest. So please take note, okay? We've got loan interest. So these items, you should not confuse them. There's loan interest, okay? There's what? Loan interest. So remember that loan interest, they give you the percentage there. So interest is the 3%. It becomes a what? 3%. 3%, what happened? Okay, computers, right? 3%. This one is an SFP. The 3% loan interest is what? Is an expense. So it becomes, the loan interest becomes a what? In an IS income statement item under what? Expenses. Okay, I think it's clear. Okay, so please take care. But how do you classify that this one is a non-current liability? So we are saying this one, the way we are going to classify this one is a very simple one. It's both IS, the interest is IS. So I will just write both. Okay, maybe so not that you don't confuse yourself. This item is both, all right? And we record in IS, the 33% is IS, okay? 3%, let me just write 3%. 3% is IS, okay? And then the 10,000, 3%, and then the what? The 10,000, let me write 10K here, is a non-current liability. Non-current what? Liability. I hope it not all right. I think so far so good. Then don't forget that the closing inventory is always there. Don't forget this one. This one is an IS item, and so this one is both. But let's just write IS or IS. Yeah, it's fine. IS trading account. Then we have got also, it's also end, right? SFP under what? Current and current liability, right? Current asset. All right, so that's the first thing that you, and is this one is written as the first item. Always please remember, write this one as the first item. The second item is our receivable. So when you're given such a question, that's what you're supposed to do. Okay, identify whether it's an IS item or an SFP item. Then when you're done with that, then you are good to go. So for 4 months, I think I will end here today. Don't worry about other adjustments. I think we can cover these ones later on. Okay, we are going to cover this one later on. All right, so this is the first thing that you need to do. Then let me show you the second item, second thing that you need to do when you're done with this one. Let me share another screen. Okay, right. After identifying these elements now, okay, after identifying these elements, you need to to know now how to prepare the income statement. Okay, let me share the screen. You need to know how to prepare the what? The income statement. Preparation of the income statement is a very simple thing. Okay, a very simple thing, but it needs you also to concentrate. So you need to write the name. First of all, you need to write the name of the what? Of the sole trader or whoever is preparing that business. So let me insert the name there. Let me insert the row there, row above. Okay, this is a you are doing books for L. See you lucky there. This is a sole trader, a wholesaler. Maybe we can just write wholesaler, wholesaler. So wholesaler then. That's the first thing that you need to do, because you prepare different books of accounts, which you might also need to identify that this is for company X and Y. All right. Then the next thing that most of the students they forget, please don't forget the heading. Okay, there is a mark for remembering that. So let's say they are marking your work, you should not forget the what? The heading. Okay, the heading is very critical. So every time when you are given this one, put your heading. Then every time you are expected to underline, make it neat. Okay, make it neat, because we are preparing the books of accounts for directors, and these people they need everything to be neat. You're talking to the CEOs, you're talking to the human resources, most of the directors, they will see your work. So it needs to be neat. Then you need also to put the columns. Okay, put the columns, put $ at the cent. Let me just align this one to the cent. It can also be good. All right, this one, that's the these are the columns. So let me also indicate the what? The columns. So you need also to make these columns. Okay, I'm doing this video for you to make sure that you come up with something that is very nice. Okay, so I'm saying, let me put the columns. Okay, put the columns here so that you can actually see. So put the columns first. That's the first thing to do. The columns are now there. All right, there are two columns, this one and this one. So for the meantime, please don't do what about other formats that you are seeing. Let's use this simple one. Two columns, it's not debit or credit, it's just two columns, the first column and the second column. So what starts every time is our sales. Okay, remember what the question, please refer, may you take the question down. I think because of my technology here, I might not be in a position to go again to the sales, but let me try. Maybe I will see, but we start with the format. Okay, the first thing that you need to do is to know is the format. It's just like your maths. Okay, if you cannot remember the area of a triangle, it means you cannot calculate the area. So the first thing that I want you to know is the format. Okay. So for the meantime, I'll forget. But this is the answer for the question that we have been discussing. Okay. But let me give you the first thing that you need to do. First things first. Okay. Come up with the two columns like these ones, and then the main column. This must be bigger space. Okay. Because you are going to write it, there will be a lot of writing on this side. Right. The first thing that you need to know is the revenue. We start with our sales. The revenue, in simple terms, we are saying the main income, right? The main income for that period is what we are going to show on this side, all right? In this case, you can actually see that our revenue is 112,650,000, right? This is the goods that we have sold. Like this, in this case, Lucky is a wholesale, so it means he or she has sold goods worth how much? 100 and what? $12,650. Then when we're saying less sales returns, we are referring to goods that could have been retained by our customers. We are selling goods to our customers. Some customers might not be very happy, so they can retain some goods. It's allowed to retain goods when they are not happy. So sales returns, these are usually they also put a funny name there where they write returns. What? I think these are returns inwards. They're coming back into our business. Okay. They're called sales returns, returns inwards. And this item is always found on the what? On the debit side of what? Of a TB. Okay, TB, you are referring to what? To a trial balance. Is that making sense? Please understand. So we're saying when you find it on the credit side, this they are not returns inwards. So let's sales returns. If it's there, in our case, it wasn't there. Okay, so we are going to say this one minus. When we're saying less, okay, less means we are subtracting. Less means we are subtracting. So let me just add notes. Less means what? Less means we are subtracting. Okay, less it's a minus. Okay. When you're saying less in accounting, we're saying it's a what? It's a minus. All right. So we are saying 112,650 minus 0, we still get the same answer. I think you can actually see on the Excel sheet there. You were saying C4 minus C5. All right. The answer that you get is called turnover, or we call it what? Net sales. Okay. Net sales, like what you used to do in primary, net mass, gross mass. All right. These are net what? Net sales. Okay. We are saying sales minus what has been returned. Right. Then we move on to another heading. This is a heading that you need also to memorize. When you are done with the revenue side, all right, you need to know now how to calculate now, how to move on to the next heading. So the next heading, we want to calculate the cost of sales. Okay, we want to calculate what? Our cost of sales. So our cost of sales is a heading. So please, can you highlight this one? I've highlighted this one to make it bold. It means a heading. On our heading, what do we start with? This is a format. It doesn't change. It will remain like that. So you need to master the format. Okay. So we start with our opening inventory. Our opening inventory, like in our case, I indicated, you can check, I indicated the one that is opening inventory. There's opening inventory. You can actually see opening inventory, closing inventory. So our inventory, let's say we started our business with stock that we started our business with, or as we beginning the year. Okay, we had something in our stock or in our warehouse, what we wanted to sell to start with. We call it our opening inventory. Then we add our purchases. Purchases, these are goods bought for what? Resale. Okay, you can buy more, you can add to your stocks, right? To your stock. So we call goods bought for resale, or goods, okay, bought for what? Let me just write bought like this, for bought for resale. Resale. These are purchases. When you buy some goods, you want to sell them again. You know, you are in a business of buying and what? And selling. You buy goods to sell. We call them purchases. Is that making sense? All right. Goods bought for resale are called what? Purchases, like this. So we are going to add the two. When you're saying add, it means we are adding. When we say less, it means we are subtracting. So this one is add. Add means add. I think that's the simple definition for this one. So we are adding. So we are saying the opening inventory plus this one, you get this one. You can actually see on the Excel, it's B8 plus B9. So we are adding the two. Is it making sense? That's the answer for this one. Then when we're done with this one, we move on to our carriage inwards. All right. In this case, we didn't have carriage inwards. So if there was something to add again, for example, we could also add on this one. We can also add what? Carriage inwards. It depends. It depends on the question. Add carriage one. Carriage inwards. Okay. Carriage inwards in simple terms. Let's say you've bought your goods in Barimusi and you stay in Highfield. All right. You need to find the Wakumano Shungoro so that they can also carry your goods. All right. The cost that you give to now Windy or possibly whoever is going to push your Shungoro, that money is called carriage inward. Okay, you are carrying the goods into your business. So we need to add anything that increases the cost. Let's say also you are a sophisticated person, you buy your goods from China. The cost that you incur to carry your goods from China to Zimbabwe, okay, let's say we call them freight charges. You can also add that, freight what? Charges, okay? All right, maybe you are aware you can have access to trains, okay? Where there are trains, we call it what? Railage what? Charges. So I think this is a very simple thing. Just remember that, but it's not difficult. You can remember. So we're saying in this case with our purchases, add any cost that you incurred along the way before the goods arrive to your what? To your business premises. So we're saying after buying these goods, we at times we might also feel that we need to retain, like customers. With these ones, we are retaining two suppliers. Okay, these goods are going back to what? To suppliers. That's fine. They are going back to our suppliers this time around. On the first party, these goods were coming from customers. Let me just write from what? They were coming from customers. That making sense? From customers. So I think that it's customers. All right. Like that. I think it's making sense. All right. Let me try to make it bigger. But to look funny. Okay. Let me keep it like that. All right. So far, so good. I think you are following, right? So when it returns outwards, they're also called pages returns. That's the same name. Pages what? Pages returns. are also called the returns what? Outward. Returns outwards. When I'm saying outwards, as it sounds, it means they're leaving the business, they're going out of the business. All right, that's what we subtract. So we're going to say from this figure, we subtract this, then we get this. I think you can actually see from my Excel, I inserted a formula. It's B10 minus B what? 11. All right. Then this one, for now, I think I need to explain it. Let's say you bought these goods and this one you wanted to sell these goods, but you maybe you have visitors at home. Let's say it's a tuck shop. You have visitors at home. Then you took some of the goods that you wanted to sell. Okay, you took them for private use. You have got visitors at home and there's no sugar, there's no matemba and so on. Right? Then you say, let me get it from my shop or from my business. These are they reduce the goods available for resale. So we say less drawings of stock. Please, the key term is drawings of stock. Don't record drawings. We can have cash drawings. Other drawings can come in different forms. But if these are drawings of goods, okay, drawings of stock or goods, if you take goods, please, if it's just indicated drawings, don't record it in the trading account. Remember, there are drawings that we record in the what? In the statement of financial position. But these ones are specifically drawings of stock. Please, please. Okay, let me repeat it. I said, please, these are drawings of stock, not not the one that is written drawings. Please, when you see it written drawings in the trial balance, it's not recorded in the income statement. Did I make myself clear? Okay, let me just add a note. Only drawings of stock. Only drawings of what? Only drawings of what? Of stock, please. All right. I think it's getting there. Not drawings. Okay. Okay. Not when you see it's just written drawings, please don't. Only record drawings of what? Of stock in this item, in the statement of in the income statement, not drawings of stock. All right, let's move on. So we are going to say from whatever was remaining, 92,870, we subtract. We say less means we subtract. All right. So let me scroll down like this. All right. So we're saying we are going to less the drawings of stock. So let's see the answer. So you can actually see this is 92,870, right? Minus 930, right? All these figures are coming from my trial balance. The first check on the first slides, you can actually see where these figures are coming from. All right. I will try to show it in the next lesson. But for the meantime, please have the question and see the answer. All right. So we are going to say 92,070 minus 930, then that's the answer that we get. Obviously, you can actually see that there's a line that is remaining there. It's still fine, right? There's nothing wrong. So we are saying this figure, don't describe it, but let's subtract now our closing inventory. Our closing inventory, we are referring to the unsold stock. This is the what? Unsold what? Unsold. Okay. Unsold stock or inventory is what we call closing inventory. So we are saying at the end of the year, some goods, obviously it's a business. Okay. It's not everything that you buy that will be sold. All right. Then we put a line here, we underline. All right. So we are going to say 91,940 minus 6,840. Then you get this one. Okay. I think you can actually see, right? See 91,940 minus 6840. That's the answer. So this answer, you write it along the same line. You underline it here, then underline here. So you are putting a line that comes to this point. Okay. I don't want to draw because obviously it will affect but let me just show you that we underline. Okay. This one we underline. So underline, please. All right. So we underline this one. Yeah, the line is clear. There's a line below this. Then we write the 85,000. 85,100. It's coming from this 91,940 minus this one. Then we write it there. I know most students, they want to put it down, but we are almost done. And this figure is our cost of sales. All right. Cost of what? Of sales figure. This figure. Is it making sense? Right. Then we want to get our gross profit. We are now on the section of what? Of gross profit. Right. I think there's a lot of writing that has taken place that side. But let me try to erase it so that you can actually see. So let me remove this one. Right. For now, let me erase this section so that you don't confuse ourselves. Right. Now we remember we had this is our cost of sales 25, and this is our turnover. Right, this one. Right. So to get our gross profit in this case is a very simple thing. We are going to say our turnover, this one, minus our cost of sales. That's how we get our gross profit. Is it making sense? All right. Then when we go to get our gross profit, we write it in the next column and after underlining. Don't underline. Most students, they want to underline here to close. We are still using that column, right? Then we say add other income. We are saying the small income, the petty incomes that you have been receiving for that period, right? In that case, I indicated that other incomes were the rent received, okay? Rent from your tenants. Then we had the discount received for prompt payment. We add the two. So we are using the first column, 780 plus 170, we get what? 950. So these items, they are provided in the what? In the trial balance. So you cannot complain that I cannot see where they're coming from. It's only because I've shown you you can scroll down, you can scroll backwards and see where these are coming from. Okay, so we get 950. So we are going to say this one, gross profit, we add other income. This is our total income for the period, 98,500. 98,500, you can see from my calculation, is C16, which is this one, minus 9, minus plus C18. I think this is the answer. All right, that's fine. Then let's go to our expenses. This is a very simple thing. On our expenses, for the meantime, please, all Form 1s and 2s, please don't make adjustments. Just take insurance for the meantime. We just take insurance, so we are going to use the figure for insurance 728. All right, so we are going to put 728. You add what? 600 for rates, no adjustment for the meantime. All right, and then but for those when you are done with the next video, please, I want you to take into account the adjustment. Okay, so for the meantime, I want you to just calculate this question without adjustment. So without adjustment, obviously this answer we are going to use 728 without this adjustment. So 728, take 728 for insurance, take rates of 600 because that's what is appearing in the what? In trial balance. So take 600. Wages, there's no adjustment. So you just take the 25, 600. Then interest on loan interest, which I agree that the 3%, 3 over 100 is the expense component. So we are going to put 300 there. Then you are going to add your figures this time around for Form 1s. Form 4s, you can add as it is there, right? But for the Form 1s, please, can you add 728 plus 600 plus 25, 600 plus 256 plus 300? Then the total, your total, you push it to the next column. So you're going to underline here. So I will go to underline, then I underline. Then on underline again, this one, underline. Then you get your answer. So you're going to get your totals, then you put it there. Then your totals, total income minus your expenses, right? Your expenses. Can you see what's happening on the Excel? C19 minus C26. This becomes our net profit. We can now double underline and to show that we are fine. We are done with this one. So this is how we prepare the income statement. Okay. So what I want you to know is very simple. I want you to memorize the format. Memorize the format. When you know the format, it means it will be easier for you to what? To answer the question. So let me also show the question again, so that you can, those who missed the first part of the video, can you try to see, let me see my technology, my skills. Right. This is the question. All right. So this is the question. And for if you are junior, I want you to go up to try this question up to this. Let me shrink it a little bit. I want you to try this question. Okay. Right. This is the question that I want you to try. I took it from your textbook. Please, can you try this question? Right. So these are the questions. You can actually see that the revenue that we are referring to, we're taking it from this side. We can actually see sales returns. We don't have sales returns, so you leave it like that. We said the opening inventory. Where's our opening inventory? This is 7010. Add purchases. We see our purchases. We took our purchases from here. Then after that, we said less drawings of stock. Where is our drawings of stock? Our drawings of stock now, maybe, let me show you. It was tricky, but you were supposed to look at note number what? Number 2. I didn't discuss with you but the drawings of stock in this case are here. Okay, you can actually see the 930. These are drawings of stock. All right. Then we said, then we list what purchases returns. They will be shown here. These are purchases what are returns. Okay. Less closing inventory. You can actually see our closing inventory is coming from what? From this one. Okay. And then we said after that you get your what? Your cost of sales. Then you list from your what? Your turnover. Then you let's say add other income. On our other income, we are going to use the 870, the rent receivable 840, discount received 170. Right? When we are done with this now, we move on to our expense section. Our expense, we are going to use the insurance is an expense, rents is an expense, wages is an expense, office expense is an expense. Then don't forget that the 3% of this loan is a what? Is an expense. So this is how far I want you to just go with this question. So this is the question. Pose the question, try it on your own, check the answer. Okay. I think that is that for now. I hope you found this one very helpful. Please go over it over and over it again and again. Okay. All right. Bye-bye for now.